Good afternoon. This is Deines with your midday grain comments for Wednesday, February 3rd. Today on the Chicago Board of Trade, we've got corn down 2, beans down 10, and wheat up 2. We saw a large break in the dollar today, down 135 points, which has certainly helped limit some of the downside movement in our grain trade today. And really the big news into the market today were Informa estimates regarding the South American production. They were released today, which put some pressure on both the corn and soybean market. They had Argentina's corn production estimated at 26 million metric tons versus the USDA's previous estimate of 25.6, and then Brazilian corn production was up just a tick, which has put a little bit of pressure on the corn market today. Argentina's soybean production was estimated a real big 60 million metric tons versus the USDA's estimate at 57 million metric tons, and Brazil's soybeans were estimated at a slight increase as well, which is putting a lot of pressure on the soybean markets. And really, as we move forward, we're going to continue to watch the forecast pretty closely for South America to see how this will continue to affect their overall production. The long-range forecast really remains unchanged this week, expecting some drier and warmer conditions to rebuild across that northern part of Brazil in March and really continue into April and in May, which is favorable for the corn and soybean crop as it'll be there dry down and harvesting, but might begin to stress some of the safrinha crop as that's in the germination and early growth stage. So we'll continue to pay attention to that moving forward, but obviously seeing a little bit of pressure from those Informa numbers that were released today. Corn obviously trading a little bit lower as well today based off of the release of weekly ethanol numbers, which showed a 4% increase in stocks. Production was down just a hair this week, and gasoline demand continues to remain down nearly 7%, which mostly is attributed to the weather as well. So continuing to see the ethanol stocks numbers continue to grow as margins continue to stay very narrow. We are looking at the dollar, though, very closely, as this might help spark some export business, which could keep the grain markets getting some momentum back if we do start to see some export business move back our way. Really would continue to watch on corn. The 50-day moving average will be a nearby support at 367. We look to see some resistance on the nearby numbers at 379.5, which is our 100-day moving average. And on soybeans, we've also got some initial resistance at 881, which is the 100-day moving average. And on the upside, we've got the 889.5, which was the 6-week high that we saw on Tuesday. Certainly we'll look to test that number again and look for that to be a little bit of resistance as we move forward. We did see wheat also seeing some spillover weakness from corn and soybeans early on. Demand concerns do continue. The dollar is also creating some potential optimism in the wheat market, though. We did have Informa estimate the Indian wheat production at 87 million metric tons versus the USDA at 88.9, so that is finding a little bit of small support today for wheat to close in the green. We've obviously got a few things coming up to be on the lookout for. Tomorrow we've got the Stats Canada report. The December 31 stocks report will be released tomorrow morning. We'll also have some of the official Brazilian corn acre estimates by the end of the day tomorrow, and then next week we'll have our monthly USDA supply and demand report out on Tuesday. So all of those things will be important to see how they influence the markets here moving forward. That's all we've got for you today. Hope you all have a great afternoon.